What is going on, guys? What is going on? Apologies. Let us get right into it. Let us get right into it. Apologies for being late. I had a few technical issues, really embarrassing technical issues. I just had too many tabs open and my computer started slowing down, so I had to close all of the tabs that I had open. Really liberating, actually, to be honest. I had about 4,500 tabs open, and it was just sucking the computer resources. So let's get into it. Looks like inflation came in as expected, and as I said before, if inflation comes in as expected, the market will likely respond well to this. And the market has responded well. If you take a look at the markets at the moment, let me see. Can you guys hear me? Coffee finally kicked in. CPI. Can you guys hear me? Let me know if you can hear me. But markets responding well to it so far. Remember that the initial response is not always the one that is going to stick, whether it's positive or negative. So don't take this as a sign that we're going to rally in perpetuity. Let's take a look at what Steve Leisman has to say here. Hold on.
Part of why the Fed can relax a little bit. I think this number, Becky, just to sum up, because it is not worse than expected, the Fed has the latitude or flexibility to pause if it feels it needs to because of the financial conditions.
All right, we'll come back to shelter in just a moment, but Joe, let's talk about what you think the Fed should do here.
They should definitely pause when you have a crisis like this, and you could just see based on market price action how much the 2-year notes moved, biggest since '87, how much front-end spreads have moved, biggest since the Greek crisis. The Fed's either eased shortly thereafter or they've paused. In this case, they could pause. They could stop the QT because the QT is draining the bank reserves at a 10, 11% rate. That's because right now what's happening is these smaller, medium-sized banks are scrambling for deposits. Wait, see how things evolve. You've got the new forecast. You can still highlight the fact they need to do more. They'll likely need to do more, but just wait. Go 5 weeks, see what happens. You can reevaluate in May.
Dana, how about you?
I think there definitely is a possibility that the Fed will pause next week. This is a crisis in the banking sector, and certainly the Fed doesn't want to do anything to exacerbate it. But I think that even if the Fed does pause next week, they should send a very strong signal that it's not done, that there still needs to be further interest rate hikes to tackle inflation. Inflation is sticky, and it's not coming down as fast as what would be expected.
Jason, if that is what the Fed actually does, and Steve Leisman has been telling us that that could be what they do, that they could take a page from what we saw in Europe last time around, where they stopped and then came right back on with the Bank of England. If that's the message, as an investor, what do you do? As somebody who's actually putting money to work, is that a sign for risk on again?
Not for very long. I think I would view it as kind of the pause that refreshes, and I would use it as an opportunity to probably de-risk the portfolio, because I agree with the other guests, and I agree with Steve and Rick. I think that there's a decent chance they pause tomorrow, but we're a long way away from the Fed's target. And I also think the Fed is also, we have to remember, is playing a political game here because we're heading into an election year next year. And I don't think they want to have their fingerprints over another bank failure. So there's a lot of things that are coming into play here, and it seems to me that as an investor, you want to de-risk the portfolios because we are getting to the point at which the Fed tightenings are breaking things, as they always do. And it will be hard, it seems to me, to avoid a recession given the amount of tightening that's been in the system. But it probably, discretion is probably the better part of valor here for the Fed, and they should probably take a little bit of a breather.
Jace, when you say de-risk the portfolio, I assume you mean don't buy financials even at discounted prices? Is that the case? What else would you mean by that?
I think so. I also think that there's still a lot of...
Thank you so much, Robert Wilson,
there's
for your
still a lot
donation.
of companies
that
are either profitless or trading at very high multiples that are inconsistent
but thank you so much for the
with
$50 donation
a Fed
to
funds
St.
rate of 4.75 and an inflation rate, frankly, at 6. And I would say what the Fed has done this week, or at least what the Fed and the FDIC have done, you'd have to say is at the margin an easing. It's not a tightening I mean, it's necessary, but it's somewhat inconsistent with fighting inflation over the longer term. And that means the Fed is probably going to have to be back at some point later in the year.
Mike Wilson has been raising some concerns about this. Look, people had been thinking maybe he got it wrong until we saw things start to shake up like this. But you've still got the S&P at 3855 is where it closed yesterday, below 4,000, but still sort of hanging in there. It sounds to me, Jason, like you're just kind of uncomfortable with stocks at these levels still.
Yeah, I mean, I think Becky, at 18 times earnings, again, it's really hard to square that with a 6% inflation rate, even though it might be closer to 4 towards the end of the year. Just historically, that's a very hard thing to make the case for. And generally speaking, Randy Quarles has talked about the idea that the soft landing is really for fairy tales. That's something that it's happened. 1994 is a good example, but it's rare to have this kind of tightening without economic dislocation.
Joe, let's go back to just how concerned you are about inflation right now, how sticky you think this is.
If you have a recession, I mean, Jason admitted it, you have an index leading indicator shrinking 6% annualized. But by the way, before the last week's situation, 2-10 curve, record inversion, minus 110, minus 111. I mean, that was 2 days before. So the Fed is now tightening and taking liquidity out of the financial markets and the economy. I mean, this is like silliness. I mean, they're making I think this is just pure stupidity.
But you think the inversion is a good indicator of
It's a great indicator because not only predicts recessions, it causes recessions. That's why the banks are scrambling for funding. So if you have a recession,
right,
inflation's going to go down.
But Joe, I want to go back to, we were talking about this during the commercial break, whether you actually hold the Fed responsible for the failure of these banks, or you hold the executive management teams of these banks responsible for not having proper, a rainy day fund, knowing that it's raining outside.
Look, we know in these crises, it's generally more than just one institution. It becomes an industry-wide phenomenon, and when you have these crises, then the Fed, I would argue, is sort of a reason for it because they've raised rates so aggressively, and I'd say imprudently.
All right, let me let them stop talking and let's go over the inflation report. I'm going to go over your questions, but first of all, good morning to everybody on here. Good afternoon if you're on the other side of the world. Carlos Peralta, Astro Geek, Idris, Soner, Hans, Robert Wilson. Again, thank you so much for the $50 donation to St. Jude's. James Hill, Danny Samuel, Richard Soren, Shindo's, Jason Gray. What's going on, guys? All right. Chasing Cash, what's going on? So here's the skinny with inflation. The CPI index raised 0.4% for the month, putting the annual inflation rate at 6%. Both readings were exactly in line with Dow Jones estimates. This is probably why Biden the other day came out and was talking about how I don't know. He was saying that we are in good shape as it relates to inflation. He probably knew what the CPI number was. Excluding volatile food and energy prices, this is the core CPI. It increased 0.5% in February and 5.5% on a 12-month basis. The monthly reading was slightly ahead of the 0.4% estimate, but the annual level was in line. So core CPI coming in slightly higher. Now, we know that these numbers really don't even matter anymore because of the revised CPIs. And I covered this story, and you guys that are, that are fans of this channel know that I covered the story. But the BLS, the Bureau of Labor Statistics, basically revised 4 out of the last 5 CPIs, and they were actually higher than what was projected. So they didn't revise them lower. You would think that if they were manipulating the data, they would just go ahead and revise those lower, but they actually revised them higher. And also, just because February was a down month doesn't mean that March, inflation can't tick back up. Remember, these are lagging indicators. So with that said, the numbers are what they are right now. Let's take a look a little bit deeper into the numbers. It says CPI measures a broad basket of goods and services. Yeah, blah, blah, blah. Markets Tuesday morning were pricing a peak or terminal rate of about 4.92%. So this is the max at which the Fed funds rate is going to hit. And the reason that it is significantly lower than the above 5.5%, for instance, that was projected by the Fed's dot plot, above 6% that was projected by the Fed funds futures traders, is because of the bank runs. So the bank runs are basically scaring everyone into thinking that the Fed is likely going to pause now, either do a 25 basis point rate hike and then pause, or pause altogether. And this is the reason that I was saying that, I was bullish on the 2-year Treasury note futures. And for those, again, that are fans of this channel know that I was actually stopped out of this trade, unfortunately, even though I had a stop limit that was well below the support line. It dragged so far below that I was stopped out, and then eventually had the best 3 days in history. But this is why I was bullish on this, not because I knew bank runs would happen. I didn't know bank runs would happen. But I know that once you start raising the rates, if you're the Fed and you start raising rates aggressively, to the point where now the 2-year note is below the Fed funds. Remember, I called this out a month ago, 2 months ago, when this first fell below the Fed funds rate. And I'll explain what this is in a second. But once this happens, this is when stuff starts breaking and problematic systemic risks start unfolding, right? In this case, the systemic risk was with how some regional banks were positioning themselves for interest rate risk. And SVB definitely wasn't. They were lazy about it. And hopefully, people are prosecuted for mismanagement of that risk, right? And I'm glad that so far in this, what we're calling bailout, I guess, so far it looks like, shareholders and executives are not going to get paid. They're just trying to make the depositors whole. And I want to get your take on whether you think the SVB bailout was actually bailout. I did a video yesterday, and the commentary was all across the board. And I, respect everybody's opinions. I do like listening to different viewpoints, especially if they're backed by evidence. But basically, the SVB depositors were made whole by the FDIC, and then the Fed announcing that it will be prepared to loan money that it expects to be repaid if necessary. They have not done that. But when that 2-year fell below the Fed funds rate, if you look at every single time that it happened in history, the Fed actually paused. The blue line is the Fed funds rate. The red is the 2-year. But look at this, right? Look at every time the 2-year fell below, the Fed actually paused. And that's because something broke, right? In 2008, it was the housing market, more specifically mortgage-backed securities, and the shenanigans that were going on there, right? And in this case, it was the regional banks that weren't managed for risk properly, for interest rate risk. And so that is why I was thinking that we would eventually get a pause soon. And again, if you're a fan of this channel, you already know this. But that's that is the reason why I was bullish on the 2-year note futures. I'm like, the 2-year note, the 2-year yield is going to stall here, and the 2-year note futures are going to rally. Remember that bond prices and bond yields move inversely. So that was my thesis. It played out, but I ended up getting stopped. It says they took your liquidity to go long. Yes, of course. Soak. Thank you for repeating my own trading concept to me. Right? Or the concept that I use the most to me. But at some point, the 2-year, I could have waited for liquidity to be taken, but I knew that the moves would be big. So I tried to front run it a bit and give myself a much wider breathing room. But, you cannot avoid, getting stopped out at times. It happens to the best of us, and that happened to me. And that's fine, because I know that this is going to be a killer trade for the long run. Once the Fed pauses, the 2-year futures are going to skyrocket. And if you want to get my real-time trade on this, when I'm going to enter this, how I'm going to enter it, make sure that you are signed up for the Academy. Link is in the description below. I will send out my exact trade, but I think this is going to be the biggest monster of a trade, because look what happens when the Fed pauses, the 2-year yield crashes, meaning the 2-year note rallies, right? And so I'm expecting this to happen. I mean, it happens every single time that the Fed pauses. You could see that, right? You could see that in 2000 and 2008. You could even see it in 2019 when the Fed stopped its taper tantrum. And this was right before the pandemic, right? When Donald Trump was urging Jerome Powell to stop the taper tantrum, then the 2-year yield crashed. And I expect the 2-year yield to fall from these highs that it hasn't hit since 2006. So this trade is going to be a monster trade. I think this is a much easier trade than anything in the stock market, trading the 2-year treasuries. So if you want to learn how to do it and you want to learn when I'm going to do it and what trade I'm going to put on, make sure that you are signed up for the Academy. If you are approved, you will know pretty soon. So apply. Otherwise, let me get to your questions here. Where is my thingy? Okay. Good morning, Juan Santana. CPI. Yeah, aren't we already in a rough landing? Yes. This is, if you count what is going on with the banks and the bank runs, let's see what the regional banks are doing, by the way, because I actually think there is a huge opportunity here. I might actually start buying into the regional banks because, obviously we've had let's take a look at the weekly chart. But this week, the regional bank ETF was down 16% and then another 12%. So the regional bank ETF was down 28%. And I think this is definitely, there will be opportunities here. And I don't want to be picking regional banks, to be honest, because, just like you saw with Kramer, and I posted this hilarious thing yesterday. I'm going to show it to you guys. But just like with Kramer, let me show you what I posted yesterday. It was, this guy, it can't get worse than this. I don't know how you are this bad at picking stocks. And the thing is, with Kramer, I don't know why he continually picks stocks. Like, you can cover the stock market. Like, I've covered the stock market for years. And for instance, for the last year, I barely picked any stocks. Like, I've barely said that I was buying into anything. In October, I said I thought that was a good time to buy on the 50% retracement of the last bull market. But other than that, I've rarely, bought anything. I don't know why he continues to put his foot in his mouth. But he was talking about FRC Bank, and he tweeted this on March 10th. FRC is new focus. This is after SVB had collapsed. Very good bank. And it has been down 70% since he tweeted this. So, I don't know why in the middle of a banking crisis, a regional bank crisis, do you feel compelled to start picking regional banks that are potentially carry the same risk that SVB did, right? Anyway, that's neither here nor there. I just found that to be hilarious. But I do think that there's also an opportunity in banking, not only in the big banks, because XLF has declined a lot too. And this has just been a powerhouse of an ETF over the last year. But XLF has dropped, let's see, let me take a look at the weekly chart, sorry. It's dropped 9%, 8, 12, almost 13% over the last week. So definitely, I think there's an opportunity in XLF as well. Now, these to me are not swing trades, but anytime you see overreactions like this on major ETFs that you eventually want to own, for me, that is a good time to dollar cost average. But they are not swing trades, so don't misconstrue them. You don't think he knew? Do I think that Kramer knew? No, I don't think he knew. You're giving him too much credit. And if you guys want me to explain the bailout, if you want me to explain what happened with Silicon Valley Bank, if you're still confused about concepts such as FDIC or how the Fed rate hikes caused SVB to collapse, let me know. If I don't trade 2-year future, what stock or bond can I buy for the same move? You can't. there aren't equivalent plays for everything, right? Things that carry a hefty reward are usually because that thing is either less accessible, either by knowledge or by access, and harder to play. You can't just find an easy route to a similar lucrative reward, right? What concepts do you trade with? I've done tons of videos on my trading, so I don't know if I'll go over it in this video, but I talk about my trades in so many videos. Books are cooked for sure. Yes, chop remains. Regine, what's going on? Huang Nguyen, another choppy day. Yes, but Huang, the market hasn't opened yet, so give it some time. It still is going to be very choppy. Okay, so S&P futures. S&P futures are up. Let me see if I can do. Let's try this. All right, so we'll do S&P futures, NASDAQ futures. Let us do the Dow futures. Why is this one on the top right ugly as hell? It looks different than the rest. So NASDAQ, S&P, Dow, and then what should we pull up? Let's pull up the 10-year yield. TNX. Here we go. 10-year note yield. So these are all dailies, right? So the S&P futures right now up 1.18%. NASDAQ futures up almost the same, 1.14%. Dow futures up 1.03%, and the 10-year Treasury note is actually up. The yield is actually up 1.5%, and this is likely due to core CPI coming in slightly higher. But you do see that it did skyrocket, and it is falling from the pre-market highs, but it is still up. The yield is still up 1.5%. So let's see what the 2-year yield looks like. The 2-year yield is slightly up. Wait. The 2-year yield is up 6.08%. Which one was this? NQ futures. Okay. Is now a good time to pick up shares of TQQQ and SPXL for a swing? Richard, if you have to ask, then you should not be playing those instruments. And I mean that sincerely. Right? Like if you have to ask whether it's a good time to pick up triple leveraged ETFs that are meant specifically for traders, then you should not, in my view, respectfully and humbly, you should not be trading those. Okay? Those are meant for folks who are confident in their trading. Obviously, tons of people who aren't confident in the trading or don't have a strategy will play risky things anyway. But those are triple leveraged ETFs that are meant for short-term trades. So, asking if it's a good time means that you don't have a strategy behind it. And you are looking to invest in TQQQ or SPXL. And those are not investment tools. Triple leveraged ETFs are meant for very, very short-term swings. So if you are able to read a chart and you can trade them, sure. But, right now you are buying on the biggest pump pre-market. These are the pre-market highs. We don't know how the day is going to end out. Again, for those of you that are joining us late, CPI came in line both year over year and month over month. However, core CPI came in slightly higher, 0.5%. versus an estimate of 0.4%. And remember, the Fed said that they look at core more than they look at the regular CPI. And you can see the regional banks completely rocketing here. As I was just saying that there's an opportunity there. Of course, there will be enthusiasm because of the fact that so far we have gone, exactly 48 hours without another bank, folding. Let's see what they say about the Fed rate hikes.
America. We own those. Morgan Stanley, they're not really, in fact, they're getting more deposits. Morgan Stanley is a wealth, absolutely, but they'll probably is come and say, hey,
Could go.
Here, look at the regionals.
so I think the Fed has to relook and see what have they done so far, and probably they will raise 25, and at that point look back and say, hey, we did put a backstop on these banks. Let's see what happens. And I think with the data coming in showing that things are slowing down, the confidence in the economy is kind of what people are looking at. In the long term, you're going to make money in the stock market. We're going to have these hiccups. History will tell you the Fed does not stop raising as soon as something happens, but they'll probably at the tail end. We're in the 8th and 9th inning of this now, and the question is, where do we go from here?
Are there banks that you want to own right now?
Oh, absolutely. I mean, you look at the really strong banks like a JP Morgan, a Bank of
These are the
America. We
history
own
of
those.
the rate
Morgan
hikes. This is
Stanley.
going back last
They're
year.
not really. In fact, they're getting more deposits.
Sorry, I was thrown off because I was like, you know, it looked like they were showing projections for future rate hikes. I was like, that does not look right. But they were showing going all the way back to March of last year. They were showing you the history of the rate hikes. All right, let me get to your questions. Hans Benz, thank you so much, bro. Thank you for always watching, always commenting, and more so, thank you for your donation. Appreciate it. Thank you so much. Yeah. All right, let's see. Cool. Let me get to your questions. What questions do you guys have for me before we jump into more news, if there is more news? Run to BSL. Yeah, you're talking about the futures. Yes. I mean, right now. Let me take this one view. Here's the S&P 500. Yes, you're right. Buy side liquidity is right here, and it looks like we're going to take that out, right? So let's see what happens. Is this short the rip at 4,050? What do you mean, is this short? Is this short the rip to 4,050? You mean short 4,000? I don't know what you're saying. Sorry. Bro, you're the GOAT, always been. Thank you so much, Osama. Thank you. Is it going to be choppy now? I mean, the market is not even open. Avarup, the market's not open. So... yeah, I mean, of course it's gonna be choppy. But he gets told what to say, but he's not like you. Oh, you're talking about Kramer. I buy my groceries at Walmart, and I buy according to Mediterranean diet because I'm from Europe, and there's no difference between 2019 and now. Be a smart buyer. What are you talking about, bro? I don't know where you live, but even if you're on the Mediterranean diet, prices in 2019 are not the same as now. Thank you for your insights, Dev. Lorenz Billups, thank you, brother. Thank you so much for your $20 donation. Appreciate you, man. Appreciate you. Thank you. And spiffy profile picture. That's dope. You're more informative than CNBC. Thank you. Appreciate it. Is the contagion effect of SVB fizzled out now? Okay. So let's talk about SVB for a second. Now, the interesting commentary. So I released a video yesterday detailing the SVB bailout, right? And I'm calling it a bailout loosely. Is it really a bailout? No, not in the general sense, of a bailout like we saw with 2008. And I'll explain the differences, okay? But firstly, the money to pay back depositors, and depositors just mean people that had money in the bank, came from FDIC. Now, FDIC is the insurance company. You're insured by it. I'm insured by it. Anyone that has a bank account is insured. Oh my God, look who's on TV. Anyone that has a bank account is insured up to $250,000. Now, over 40,000 customers of SVB are businesses. I mean, SVB had 40,000 customers, most of which are businesses. And most of the accounts are over 250,000. So where did that money come from? Well, it still came from the FDIC, and not from the taxpayers. But in order to prevent contagion and prevent more bank runs, the Fed, the Treasury, FDIC, the government, obviously the other bank conglomerates, agreed that there has to be faith restored from depositors that their money is safe, or else everyone would start a bank run on their regional bank. Okay. And a bank run just means everyone rushing to the bank to withdraw their money. So the FDIC said, we'll come up with a plan. Here's the plan. SVB is up for sale, right? Its assets, customer loans and stuff. It's up for sale. Someone is going to buy it, right? And these assets are worth money. They're on the balance sheet. So we are going to give depositors an advance based on the future sale of these assets, okay? And the FDIC, by the way, historically they've done this too, where maybe they haven't given out an advance of this size, but historically when banks fold, the FDIC regulators come in, shut the bank down like they did with SVB, and then rush to find buyers for the assets of the bank that's being shut down, okay? So in this case, shareholders are not being compensated. Executives are not being compensated. Major stockholders are not being compensated. The venture capitalists that invested in SVB are not being compensated. And the bank is actually failed, right? So there's been this misnomer that, SVB is too big to fail. It wasn't too big to fail. The fucking bank failed. It's gone. It doesn't exist anymore. It will no longer exist, right? So this is why it's different than other bailouts, in my opinion. And the money didn't come from taxpayers, meaning we are not footing the bill. The government is not bailing out SVB. The money came from FDIC. The money in FDIC comes from other banks, other private institutions. It's not government funded. It comes from other banks who are required, since 1933, are required to pay a premium to the FDIC as an insurance company, the same way that I pay a premium to my home and car insurance companies, and you do as well. Banks pay the FDIC this premium, and they are required to, just like you are required to have home insurance and you are required to have car insurance. You can't say, I'm buying a car, but I don't want car insurance. You can't elect not to have it. By law, you have to have it. By law, banks have to have FDIC insurance, okay? So that's where the money is coming from. And that's why, to me, it's not the same as a traditional bailout, because the fat cats are not being compensated. They are basically on this deal with SVB. The executives, shareholders are basically broke as it relates to their SVB holdings, and it's only the people who the only crime that they committed was opening a checking account, right? Like when you open a checking account at your bank, you don't go over your bank's balance sheet. You might not even know or be qualified to go over a balance sheet and uncover, any mistakes that your bank has made. Even regulators, couldn't see the error in SVB's balance sheet until Moody's actually spotted it. Moody's spotted it, which is the credit rating system. They called up SVB and they said, "Hey, we just noticed you have a shit ton of treasuries that are basically priced on the old rates, and they are now underwater because rates have increased and you have done nothing in order to manage that risk." And that's how shit hit the fan. So hopefully all that makes sense. Eduardo Chonkin, thank you so much for becoming a channel member. Thank you. Appreciate you. Inflation is still 6%. It's not 2%. Jason, I'm not sure if you're responding to someone else in the chat, but yeah, I know it's not 2%. Anonymous donate. Appreciate you, Anonymous. Thank you, guys. Thank you so much for donating $20. Do you have a Patreon? No, I don't. But there might be a large announcement coming soon, okay? I heard you guys, a lot of you were talking about a monthly membership that would be more cost effective for you, more economical for you. And if you guys want me to open up a monthly membership that is Discord only, that doesn't get you access to the mastermind calls, to the courses, and all you want is access to the Discord for a monthly price, hit that thumbs up. Oh my God, the thumbs up on this is paltry. This is horrendous. Almost 3,000 of you, and the thumbs up is horrendous. Guys, hit that thumbs up so that other people find this, okay? And if you want me to open up a monthly membership, hit that thumbs up too. All right. Let me get to your questions. How did you see my message? Hello, did you see my message? Yeah, I just responded to your message. I already hit the thumbs up. Appreciate you, Sonar. No, you can turn to CNBC and listen to that bum. That is not working quite well in the last year, restoring confidence in the people's investing as if it was myself back in 2010. Eduardo, not sure what you're talking about. When I was talking about confidence, I was talking about depositor confidence, right? People who have money in banks. All right, let's see. Looks like we're taking out buy-side liquidity on the S&P 500. Still up 1.12%. Let's check the other indices for fun. NASDAQ up 1.02%. Dow paired some of its gains, 0.86% up. The 10-year note, the yield is back up to near session highs. So a lot of action going on pre-market. Guys, hit that thumbs up. If you are on this, takes 2 seconds, allows other people to find this. If you guys want others to have quality information, do it for them. Be a good citizen. Z, why are you helping us? As people say, if you know how to harvest gold, you will not share the secret. It is crazy how good as a man you are, my man. Gashito, I cannot take credit for, being quote unquote a good man for this. I mean, I honestly I started this channel in 2017 because I like talking about the markets. It was a way for me to, if I have a channel talking about the markets, then I'll be forced to do more research and be more well-versed in the topic that I'm very passionate about. So I started this as a passion project. Anyone can start a YouTube channel. It is not, it's not, I don't view it as something as altruistic as other people who do really good philanthropic work, but I appreciate the kind commentary, man. Thank you. Are you currently buying puts? For what reason, Ron? For what reason would I buy puts? Always have a reason for why you're doing something. Am I buying puts just because the market is up like this? No, I will likely be trading futures later in the day with the trading group for sure, especially to take advantage of this volatility, because if you look intraday, there is likely a lot of volatility to be taken advantage of. But buying puts, maybe with SPX, later in the day, we'll see how the day unfolds. But yeah, but it really depends on what happens. I mean, I will, in my view, we are going to see a lot of volatility today, because there is so much going on, and you see the 10-year note skyrocketing, and the 10-year note skyrocketing today, or the 10-year note yield, not the actual note price, but you see the yield jumping today, and that yield jumped, I think, because of the fact that that core CPI came in higher than expected, right? And core is the one that the Fed is looking at, and even though CPI came in line, core is the one came in higher than expected. And then obviously we have, all of the banking uncertainty. It looks like it's contained for now, but famous last words, right? We don't know how that's going to play out. So crude is down near lows. Let's look at crude. Oh yeah, to me this is a low risk trade. I might trade crude oil futures as well. This thing moves like crazy, by the way, okay? Crude oil futures, if you thought that index futures like the S&P futures and NASDAQ futures are insane, crude oil futures move like crazy. But this, to me, yeah, I think it's a pretty low-risk trade. As long as you have a tight stop limit here, I think this is a pretty low-risk trade. I agree. I do like this. It's been in the same channel since November, so we're talking about 5 months here. I like this trade. I definitely like this trade for sure. And then I was also looking at natural gas, up, well, let's see, pre-market. Oh yeah, up nicely pre-market. Is it? Let's see. Where did we close at yesterday? Hold on. We closed at 570. Oh, okay. It looks like it's flat pre-market, but it was up 13% yesterday. So I was looking at natural gas as well. All right. Let's take a look at your questions. Kaitala, I wish you did a little snippet every so often for us poor people with small money like $100 to play with. Wish I had big money to trade like you do. Okay, let's address this, okay? I've talked about this quite a bit before, okay? But when it comes to trading, one, this isn't, and I say this respectfully, this isn't a casino where you're like, I have $100, I want to put it on black or red or whatever. Trading is a lifelong journey and skill level that will take you years to hone. And even after being in the game for years, you still discover every single day ways to get better. Okay. And because of that, it does require a ton of capital. And as I said before, your job or whatever you do in order to make an income is going to be your best friend if your goal is to be a trader, right? But taking a small amount of money and trying to turn that into something legendary is not the way. That is not trading. If you feel like doing that and you feel like treating, the markets like a casino, sure, you could do that. You could take $100 and say, I want to play SPY options or SPX options. You could definitely do that. With $100, there is an option. There's one contract that you could buy on a daily basis if you wanted to. But that is not the way that trading works. Your job is going to be your best friend. You do need a continued income if you want to really learn how to trade and you want this to be a lifelong endeavor. You cannot view it as, I only have a small amount of money, that's what I want to play with. No, you set aside money that you continuously bring into the markets, whether for trading or investing. You cannot take a small amount of money and somehow trade optimally and plan to turn that into a much greater sum. You can get lucky. You can also get unlucky. That is not, that is not the crux of trading. That is not the thrust of it. And there are tools. You don't have to be participating with real money anyway. There are tools that, in my view, you should take advantage of way before you even consider committing $1 to trading, right? Paper trading, charting, these are things that you could do without having any money. So, while I get it that some of the plays that I trade are futures that do require a ton of collateral, one, that's not necessary. Two, I talk about a ton of things that don't require collateral, but that's neither here nor there, right? The concept of trying to turn a small amount of money into a large amount of money, save that for the lottery. That's not what trading is about. Trading is an everyday endeavor that you are trying to sharpen and improve. And you basically want to be able to grow. You want to be able to have a healthy income stream to support your learning and eventually become a profitable trader. But trying to turn a small lump sum into a larger one is not what trading is about, right? It might be fun. It might be, like a casino at your computer, but that's not trading. And there's tons of things that you could do. There's tons of things, there's tons of other things that you could do besides committing money that will help you at this stage. All right. Sorry, it took me a while to get to that point. Dr. Jennifer Berry, what's going on? Monday and Friday, ES was rejected at this level. Yes. We're at a 3-year point of control now. Wow, I didn't even see the 3-year point of control, but appreciate you for that. Thank you for that knowledge. All right, 1 second. I'm just logging into one of my accounts. All right. Other questions that you guys have while I'm pulling this up. Why is my computer acting so slow at the moment? Thinkorswim takes so much from your computer. I hate it. So many resources. All right. Cool. All right. Gap and crap, I think. I mean, we're hitting this area of liquidity here. And it looks like we are taking buy side liquidity, but okay. Someone had asked me about my trading strategy or my trading style earlier. Here's what I would be doing. You could front run this, meaning you could short here and set a stop limit. Since we took liquidity, you could set a stop limit above this wick. I have no problem with front running sometimes, right? But that is not, that is really not the optimal way to trade. If you wanted to trade optimally, what you would do is you would wait for liquidity to be taken, wait for market structure to break, wait for the retracement, and then that's what you want to short, okay? That is, if you were really being prudent, that is what you'd want to do. I don't mind shorting here and setting a stop limit slightly above. It is still pretty low risk, but yeah. Where is my thing? Where did the chat go? Oh, there. Classic ICT strategy. I mean, he's not the one that created supply and demand or retracements. These are concepts that have been around for a while. But yes, I mean, ICT has, I guess, collated a lot of these concepts into a definable strategy. But these things have been around for a very long time. Is this a pump before a big dump? How could anybody tell you that? Who knows? The market's not even open yet, right? That's why you wait for liquidity to be taken, and then you trade the retracement if it's taken, right? When you're trading, you're not guessing. When you're trading, you're trying to play. You're trying to trade optimally, right? You're trying to trade after market structure has broken and price is telling you something. Right now, price is not telling you anything. Price is just moving up into liquidity. That's it. All right. How does one identify liquidity? Bond ladder, how to build one. Okay, let's go over this. Do you have a wife and kids? No, I don't. Would you be looking to see if oil bounces from the lows? Yes, I will likely be trading oil, as I said. Will Powell give us 25 basis points and then talk dirty? I don't know about talking dirty, especially with all these bank runs. I do think we will get 25 basis points. I don't think there's any question about that. You said a retracement. What do you mean by that? Okay. There's a lot of questions about this. So how to identify liquidity? In reality, it's really honestly not more complicated than finding what the relative highs are for the time frame that you're looking at. So this high from yesterday the spike here, to me, that is an area of liquidity. So what you're looking at is for stop limits to be run above this, right? And that's why you see this pop above this resistance level here, right? This is institutions taking everyone's stop orders before taking this thing, potentially taking this thing short. So that's, you know, that's what liquidity is. What was the other question? How to build a bond ladder. When you're building a bond ladder, you're basically buying bonds of different durations, or it could be the same duration, but here I'll show you an example. So the 1 month is paying 4.48% yield, 2 month 4.7. You could see so on and so forth. Wow, Meta to lay off 10,000 or more workers after initial cuts in November. That's crazy. So essentially, like, say you would buy, let's just say we're going to be building a bond ladder. It's basically mixing and matching durations. So let's just say that you had, I don't know, $30,000 to spend. You'd put $10,000 in a 3 month, $10,000 in a 2 month, $10,000 in a 1 month. And then the one that matures the soonest, you would then take that and put it in the 3 month. And then once the 2 month starts maturing, you would take that and you could put it in another 3 month or a 4 month, for instance. So it's basically having expiring or maturing treasuries continuously and taking that and putting it in a longer one. And then the next one down the line matures, and then you take that and put it in a longer one. And you just keep doing that to take advantage of all of this yield here, right? And these are the best yields, I guarantee you, that you will ever see in your lifetime. These are yields that only your parents have seen. Tommy Luck donated $5. Appreciate you. We need Mini Z. No kids. Why, bro? You're. Let's not. Let's not make this a conversation about having kids. But yeah. You said retracement. What do you mean by that? A retracement means a movement back into the direction, right? So once, if this liquidity is taken, you see move down, and then a retracement back up, that is eventually what you want to short. Who's going to enjoy all the wealth you have worked for? Me. Who else? Is there a risk of being margin called on vertical spreads? If you went into margin in order to take those vertical spreads, yes. All right. Do you have a favorite Forex pair? No. Carvana is trash. Yes. Carvana is trash. Bull market open. Well, not yet. 4 minutes. 4 minutes left to see what happens with market open. Right now, we're up 1.3% on the S&P 500 futures. Market is going to open in 4 minutes. We will see what happens, whether we get an impulsive move up or not. Let's see. Is Meta actually up pre-market? Because they just announced those layoffs. Yeah, Meta is up pre-market. Isn't that insane? A company announces that it's laying off 10,000 more workers, and it is up majorly pre-market. Oh my God, Meta is skyrocketing pre-market. Meta is up 3.7% pre-market. That is insane. All right, let's see what happens once the market opens. Is this liquidity going to be it? Is this going to be the top, or are we going to see a major squeeze up into, near 4,000? Let's see. What do you guys think? What are your bets? Where the hell did my chat go? All right. I'm minus 17% on Meta, so when it opens, I will only be down 14%. Cybertruck Duo, morning, bro. What's going on, Omar? How you doing, bro? If you get stopped out, would you flip your trade? Not, I don't, what are you talking about? Stopped out on what and flip my trade to what? I like the idea of morning SPY puts, but I'll wait a little bit. Yeah, wait for liquidity to be taken. And wait for an actual confirmation of market structure. You have all the time in the world. The thing is, people want to front run trades, right? But you have all of the time in the world to wait to see if this is the top or not, and if market structure will be broken. I think that there's so much FOMO when it comes to trading that people aren't used to waiting to see what happens with market structure. But you have all the time in the world. You don't have to, you don't have to enter a trade impulsively. Yeah, there will always be another trade. Yes, and a better trade, by the way, and a much better trade. Which tech stocks do you like at the current price levels, and would you ever buy Credit Suisse at the current price? No, if I were you, I would buy bank ETFs. If you're trying to take advantage of, the banks themselves, and the weakness in banks, I would buy bank ETFs. That way, you spread the risk among different banks. All right, let's see what happens with the market here. Okay, new highs already. New highs on the S&P. Let's see if we get a short squeeze or a melt up. This is the 5-minute chart, by the way, for those of you guys that are watching this. Here, we can switch to the 1 minute if you want more up-to-date action. All right, so if we do break to new highs, here's what I'm targeting. We do have an area of liquidity at around 39.71. So I'll be looking around. I guarantee you that we hit this today. I think we hit this today. 39.71.50. Let's see. This is why you don't have to rush into trades. All right. Fake up and fade down. I mean, this isn't fake. Like 1.45%. That's a real pre-market pump. Meta and Nvidia top heavy, almost time to buy puts. Maybe DXY and ES up at the same time. Yeah, that's a weird divergence for sure. I don't usually trade events though, so who knows? Yes, Soak or Soke, you're right. You're right in that, these events can be hard to trade because price action does not move like it normally does. But we do have a breaker up here, yes. But I guarantee you we get to, based on this pump, we'll get to new levels of liquidity. Let's see what's going on the news front. And I'll get to your questions.
Last summer, right?
They were.
I think he's very
But I feel like he did an Aaron Rodgers thing, and then came back and was like, efficiency. I've finally got it.
He went into a dark place.
Is he selling all his homes? What's he doing? Is he getting down to the basics?
Well, I don't think he's actually, on speed dial.
Does he have one car now? Are you? I don't know.
Now, David, come on. All he's done is say, listen, we recognize that there are a lot of risks, that the economy's not that good, your efficiency. If you were to go to Cleveland and you meet with Eaton or Parker Hannifin, two of the best performing stocks of the year, what they're saying, it's an area of efficiency. Key technology is the main thing. And we basically have more in-person time, and we invest in tools to get efficient, which is exactly what he's saying. This is like what...
All right, I can't. Shut the fuck up. I can't. Is there a way to know if those are puts or buys? What are you talking about, Eduardo? All right, so here's what I'm looking at right now. Here's an area of interest for me. This order block here. And potentially this area of liquidity. So those are the two levels I'm looking at. And then obviously, if we do break market structure to the downside, then I'll be looking for retracements. CPI came out an hour ago. Yes. If you guys didn't catch it, CPI came in line with the expectations, both month over month and year over year. Core CPI is higher by 0.01%, higher than expected. Meta, short that sucker. Let's take a look at Meta. And what other charts you guys want me to look at? Hit that thumbs up and I'll look at them. Wow, Meta is squeezing into oblivion. I would not short Meta here. No. I would definitely not short Meta here. Not yet. You don't want to short on the impulsive move up. Nvidia looks like a better short. Nvidia looks like a better short, but I would not short Meta here. What is the 2-year treasury doing right now? The yield skyrocketing, up 8% today. Up 8% today. Check Alibaba? No. Oh no, not this guy. Who are you talking about? Soke. Tesla. Okay, let's look at Tesla. Yeah, I mean every market is up today. Every single one. Every stock is going to be up today. But if you're wanting to know, are there any key levels on Tesla? I mean, it did finally trade back into this wedge, which is a good sign. There is a gap still between 154 and 146 that I think we eventually will fill. I don't necessarily believe in this pump, to be honest. I do think that we can melt up for a while. I do think we'll probably cross 4,000. See, as the stock market, as the S&P 500 is surpassing this level of liquidity, to me, it's clear that we are going to hit this level here at least 39.54. And I likely would target, at least at some point today, 39.71. And I'm not shorting this until I see a market structure break. I'm not giving my money to the market at the moment. All right. WMT. Oh, on Tesla. Yeah, I do think that eventually we will resolve this gap here between 146 and 154. It might be a while, but I could easily see Tesla. I could easily see Tesla pump to about 190 or 195 again before any sort of potential reaction there. It will coincide with FOMC as well. How do you stay so disciplined? I learned the hard way, bro. But also I know how price action works. Just as I told you, this is likely going to rally up to these levels. It only made sense to me. I don't see why I would take a short here. This is clearly a melt up trending day. So I'm going to wait until the market gives me some sort of signal. And right now the market is just telling me that it wants to melt up, and we do have these key levels up here. And so until those key levels are taken or market structure is broken, I'm not going to enter a trade. Why not take a long? You could take a long. You could have taken a long at the breakout of this, but it wouldn't be optimal either. It wouldn't be optimal either. Right? But yeah, if you had a key level here and you took a long, you could have done that. Sure. Should we take CPI as neutral or bullish or bearish? What do you think? CPI came in line. It seems to, it's been 48 hours since the last bank run. So, things are probably bullish until FOMC. And I think that FOMC will do 25. But yeah. Right now, I do think there's impetus for the market to rally a bit. But remember, in February, we hit over 4,200 and we're still trading at 39.47. So, and this is a head and shoulders here. So, yeah, in my view, here's the reason I don't, I think it's going to be ugly. We're going to see days of rallying, but in general, when, if the Fed does another 25 basis point rate hike, that's going to put even more pressure on the system. And as I said, things in the system start unfolding, right? They start cracking under the pressure of the rate hikes. We saw 2 banks go insolvent. One of them is the second largest insolvency of a bank in American history. And that's not something to just take lightly, even if it was resolved and depositors got their money, thank God. But that's not something to take lightly. So it's going to be a long road before other things in the system start cracking. So, the Fed's going to do another 25 basis point rate hike. They're going to hold it there, likely. And things are going to start once again, breaking. And it's just a matter of time, in my view, before we have more uncertainty. So, in the short term, in the very short term, this is bullish, like for today up until potentially FOMC on the 22nd. But this is still a very murky time, in my view. What do you mean by the market break? You're talking about market structure? Market structure is a way to define the direction that the market is heading intraday, okay? And the way that you would define it, if I just take a new drawing tool, and by the way, we're heading up to that level that I was talking about. As you can see here, this is the level that I'd be interested in. It was basically the bearish order block from the 15-minute. We are well into that level. You could, again, take a short on this and front run it with a stop limit above, but there's also this gap here, this imbalance, and you have this area of liquidity. So a little bit too much up here for me, all around the same level. Because if I entered here, here's the reason why I wouldn't enter here. Because if I entered here, where am I going to put my stop limit? Above? If I put my stop limit above here, well, we have this imbalance. So I would have to put it above that. If I put it above this imbalance, well, we have this area of liquidity. So I would have to put it above that. My stop is just too wide. So for me, this is a non-play at the moment. But market structure is basically this, okay? I'll explain to you very simply, and then you can watch videos or read articles about it. When you're going up, you're creating higher highs and higher lows, right? Higher high, higher low, higher high, higher low. Once the higher low is broken, this one, this is called a market structure break, right? This is what you're waiting for. And the same thing is true inverse, right? When you're creating lower lows and lower highs, right, in a downtrending market, once this high is broken, now you have a new market structure. So this is what I'm looking at, right? So in this case, market structure is bullish, but I'm waiting to break below a and an easy way to do this is if you look at the line graph, right? The line, if you switch from candles to lines, then you can easily see in the method that I drew before, this is what I'm waiting to break right now, right? This low here. And so if we get a break below this low, that is the market structure break I'm looking for. Then I will look for short entries. But at the moment, I'm not looking for short entries. Hopefully that makes sense. You can watch more videos on market structure and market structure breaks. Joseph DeGarmo, terrible stream, I'm leaving. Peace. You know where the door is, bro. You don't have to announce it. Oh, you're pissed because I didn't respond to your question. What a sensitive snowflake. Never mind. I'll look it up myself. Oh, this is the guy that wanted the Walmart. Okay, so there's thousands of people on the stream. You didn't get one question responded to in time because I was kindly trying to explain market structure to another person who has a question, and you got pissed. Cool, bro. Peace. I mean, you never respond to any of my comments, but I still watch because I'm not a big baby. I promise you, if I can respond to every question, I will. Okay. But some of these things are complicated, like market structure. I can't explain that in 2 seconds and then jump onto another question. I try. And if you want your question answered, it's very easy. Just donate to St. Jude and your name will pop up and will be highlighted and I will answer your question. Other than that, I try to take questions as I see them. But yeah, what was that guy's name? I don't even care anymore. Oh, Joseph DeGarmo. Yeah, bro, if you're going to get pissed about that, I mean, you don't have the temperament to trade anyway. So hopefully you hear this. Because I might save you a lot of money. I'm leaving too since you never flashed me as I requested. I never flashed you. Bro, I'm not going to flash you. How do you identify order blocks? Okay, that is complicated. I would say watch a video on order blocks and then come back and ask me a question. That's gonna take even longer than it took to define market structure. The fuck does flashing mean? He literally means flashing. It means exactly what you think it means. He wants me to take my shirt off. Hit the like button, please. Is Lucid a hold? No, you're crazy. Andres, why would you want to hold? Lucid is a trade. It's a stock to trade, okay? As the great, I don't know who the fuck, the great someone said, there are stocks to buy and there are stocks to rent. Lucid is a stock to rent, okay? I don't know. I might have made that up, honestly. I can't even remember anymore. Short Neo. Yeah, I mean, Neo does look like a good short, honestly. I'm not going to short it at the moment, but it does look like a decent short at some point. If you guys are familiar with the channel, you know we shorted the shit out of QuantumScape. I'm still holding half of that short, and we did hit the $6 levels already. But I really want QuantumScape to be in the $5. But we shorted it from 10, and it is now trading in the 7s. how can I find liquidity? I talked about it already. Rewind the tape. I talked about it in this stream. What was that? I heard you are Flash. Are you currently in the market long-term investing? I mean, yeah, I've had a long-term portfolio for decades, but in terms of am I holding the stocks that I bought in October? I sold those on February 6th or 7th. I did a video on them. So would you trade options on USO or UCO? No, the liquidity on those options suck. So no. Demetrios 1975 donated $20. Appreciate you. Demetrios, if you have a question, leave it so that I can prioritize it and answer it first. Also, Brian Rodriguez donated $5 to St. Jude's. Appreciate you, Brian. Do you have a question as well? Brian and Demetrios, if you have a question, let me know, and I will prioritize it. So thank you guys so much for the donations to St. Jude's. Appreciate you. All right. Let's see what is up with the S&P. Are we heading to those levels of liquidity that I drew out for y'all? Yup. Here we go. First level liquidity. Secondly, we have this imbalance here. Thirdly, we have this area of liquidity here. Fourthly, we actually have another liquidity point here. So this is going to be a very hard short until, again, we either hit these levels that I'm outlining or we break market structure. Now, someone asked about longs, okay? I'm going to give you a tip here. Could you long? Yes, you could long if you were targeting these areas, but I would only long on a retracement. That means if we get a retracement down to, you can either use the fibs for this, right? So if we get a retracement down to a key fib level, this is actually too far down for me. I don't think that we will hit this anytime soon. We might hit it later in the day, but not anytime soon. But if you get a retracement down to a fib level, or you can use, EMAs, right? If we get a retracement down to 21 EMA, or you can use the concept of imbalances such as fair value gaps, right? If we get to potentially this level here, then I would consider longing, right? I would consider longing, but I'm not going to just take a straight up long out of the blue. So let's see. Brian Rodriguez, just keep up the great work. Appreciate you, man. Thank you so much. So if you have a question, let me know, but appreciate the donation. Aisha Nawab, thank you so much. $50 to St. Jude's. You are a boss. Thank you always for watching, always for commenting. More importantly, thank you for the donation. GC said, Joseph DeGarmo rage quit the stream over WNT. Yeah, bro, imagine that's what you quit the stream for, over Walmart, right? Over a boomer stock like Walmart. Do you put your pants? What? Do you put your pants before your socks or the other way around? This is a good question. If I'm wearing long socks, then I prefer to put the socks on first. Like when I'm snowboarding, I definitely put the socks on first because, those socks go up to your knees, and then the pants. So very important. What's the one thing someone shouldn't do in this market environment? Demetrios, that's a good question. If you're talking about investing, I don't think somebody should invest in companies that they know nothing about. And I don't think that they should be investing in companies that aren't solid in terms of a balance sheet, in terms of cash flow, etc. In terms of trading, there are many things people shouldn't do when they're trading, but I don't think if I would isolate it to one thing, I would say this. More money is lost trying to fight the trend than trade with the trend. And in this market environment where we have major squeezes to the upside and downside, right? Where every day just looks like a fucking carnival. More is lost trying to trade against the trend. So what I mean by that is here, I bet you a lot of people today, on FinTwit and whatever, are trying to short this, right? and they're trying to aggressively short this on the way up, thinking, okay, this is the high, I'm going to short this, right? Like they were probably thinking here, oh, this is a double top, I'm going to short here. Nope, market kept going. Then they're like, I'm going to short here. Nope, the market kept going. So, in my view, more is, from my experience, more is lost fighting the trend than trading with the trend. So if you're seeing a long uptrend here and market structure hasn't broken, you should be looking for longs, not shorts. Okay, you should be looking for longs and playing longs on the retracements. Only when market structure has when liquidity has been taken and market structure has broken, are you then like, okay, there's going to be a shift in the market, I should now be looking for shorts. Okay? Otherwise, more is lost trying to fight the trend than trade with the trend. That's what I would say. Iggy, how about longing oil? Yes, I talked about this. I think crude oil right here on the daily is in a very longable situation because you can set a stop limit very close to where you enter. So I do like this channel that's been live since November. Is JEPI still a good buy? I don't know what you mean by still a good buy. It does pay a dividend and it's a low volatility S&P 500 ETF. If that is appealing to you, then yes. Otherwise, I don't know how you're defining good and bad. In your long-term portfolio, are you concentrated into 5 to 8 stocks or more like 12 to 15? More like 12 to 15. Yeah. All right. Hopefully I'm pronouncing your name correctly. Lowry3 or Lowry3 or Lowry3 donated $5 to St. Jude's. Appreciate you. Wondering why you never discussed DIA and would you do a quick analysis on it? This is a very good question. Lowry3. I think here's why I say this is a good question, because historically, if you look at market news, from 10, 15, 20 years ago and before, everyone discusses the Dow, right? The Dow was the benchmark. But I think since then, the S&P 500 has really taken over as the benchmark to discuss, right? I'm not sure why that shift happened when the Dow became out of favor, but the S&P 500 is considered now a much better representation than the Dow, okay? At least that seems to be the case anecdotally. You'll always hear quotes about the S&P 500, right? Name is Leah. Okay, sorry. There's no way I could have known that from your username, but I will call you Leah from now on. All right, sorry about that, Leah. So the Dow is still, to me, one of the 3 major indexes. It's just, to me, it's not as indicative of market performance as it used to be. And 2, if you notice, both the futures and options based on the Dow Jones are not liquid at all. So if you look at the liquidity, number 1 by far and away is S&P 500. S&P futures are the most liquid. SPY options are the most liquid ETF. And SPX options are the most liquid index options, right? So that is why I don't discuss the Dow Jones much, because I don't trade it much, because it is not as liquid. Now, if you're looking to invest, yeah, certainly. If you look at the Dow and you're like, I like, it's well diversified because it contains stocks from so many different sectors, right? Here, let's take a look at the Dow holdings, all right? The Dow is well diversified, for sure. 21% financials, 20% healthcare, 16% technology, 15% industrials, right? The top holdings: United Health, Goldman Sachs, Home Depot, McDonald's, Microsoft, Amgen, Caterpillar, Visa. So it is well diversified. And if you wanted to invest in it, I would congratulate you and tell you that's probably one of the indexes that you should be investing in. But as a tradable asset, it just does, for me, it doesn't have the liquidity. So long-winded way of answering your question. Hopefully I answered your question, Leah. But yeah. Longable. Well, I knew what you meant. Yes, I just created that word. Longable. Ability to long. Who you got? Usman or Edwards? Gaethje or Fiziev? Usman for sure. I think Edwards landed a lucky strike. I think he's a good fighter, but I think, being rocked by Nate Diaz is probably not a good look. We didn't get a chance to see the full potential against Bilal, although I think that he was beating Bilal in that fight. Although I do think Bilal is a much better fighter now than he was when he fought Edwards. But because of the eye poke, there was, an early stoppage, I guess. But I do think Usman's got him. I think Usman's one of the best fighters I've ever seen, hands down. I put him up there with GSP, with Khabib, with John Jones. If you're eliminating steroids out of the conversation, I do think Usman is one of the GOATs with Izzy, right? Adesanya. But I do think that Usman has got Edwards. I could not really say the same for Pereira versus Izzy. I think Pereira, for some reason, is just got Izzy's number. Tank or Garcia? Tank, for sure. I think Garcia is fast. I don't think he has the power that Tank has. But I'm so excited for that fight because boxing, honestly, has been putting on some of the shittiest matchups. And I'm definitely, definitely looking forward to that. You don't like McGregor. I don't like McGregor. I think McGregor is like Tracy McGrady in basketball. Like, I think he's had flashes of brilliance. But if you look up McGregor, never had a title defense. A lot of people don't know that. McGregor defended both of his belts exactly 0 times. So to me, you cannot be a GOAT without any title defenses. Messi or Ronaldo, I respect both of them immensely, but I do think that there's no greater footballer ever than Messi. Because if Messi did not, even if Messi wasn't a scorer, he would still be one of the best footballers to ever play, right? Usyk versus Fury will be interesting, but only if you love technical boxing. I agree with you, Tom. Hey, what's going on, bro? How you doing? I agree with you. And I do love technical boxing, and I love watching Fury because he's just a huge giant of a human being that should not be moving like that. Somehow, God gave him the footwork to move like that. He's like, if you watched Shaq or Olajuwon, big guys weren't supposed to move like that, and they did. And Fury is just like that. He's a big guy that should not move like that. Somehow he moves like that. But yeah, I do think Fury will edge him out. Fury's one of these genius boxers, and I don't even think he knows why he's a genius boxer. It's just instinct. Usyk is not a slouch. No, Tom, Usyk is not a slouch. I'm not no shade at Usyk. I think aside from Fury, I think Usyk beats all of the current heavyweights, right? Andy Ruiz, Deontay Wilder, for sure, Anthony Joshua, for sure. But I think Fury is the one is the one right now that can't be beat. Who's watching the like and not smashing? Who's watching and not smashing like? Y'all are crazy. Yeah. And Tom, we need to get on a live stream, bro. Hit me up, invite me to a live stream. I do want to talk about SVB. I didn't get a chance to see what your takes are, honestly. But I'd be curious to know whether your take on the bailout is really a bailout or not, right? Because as far as so far, in terms of what was released, the way that the bailout was framed and structured, I don't think it's a typical bailout like the ones that we saw in 2008. But I'd be interested to talk to you about it, as well as go into basketball. And it looks like you are a boxing fan, which, is music to my ears. So hit me up and let's do a live stream, bro. Yeah, no worries, dude. We're both busy, but let's do it. Let's do it. I think it'll be a very multifaceted, fun discussion for sure. All right. Do you surf? No, I snowboard though. King of Dreams. Be nice to our guests, man. You will not bash our guests. Nobody on this stream. None of the guests. Be nice to our guests. All right. Let's get back to the hands down the funniest streams ever. Hi from Latvia. What's going on, man? Bailouts are when investors and bondholders are bailed. Yeah, I mean, I talked about it in my last video. But yeah, excited to hear Tom's take on it, and definitely would talk to him about it. Z is Lebanese. No, I'm not. China stock's in trouble. I mean, look, I'm not a fan of China in general as an investing environment. Okay, here's the thing. You're not dealing in a free market environment. And when the emperor, or as they like to call him, the president, can silence you, who's heard of where Jack Ma is? Who's heard from Jack Ma, right? The dude's in a box in Mongolia somewhere, okay? And there's lookalikes of him running everywhere in China. And they're like, oh, we spotted Jack Ma at the local 7-Eleven. No, that's not Jack Ma. Jack Ma is holed up somewhere in a jail in Mongolia, okay? That's not fact, by the way. Don't take that as fact. Someone's gonna clip this, and we're gonna see this on CNBC saying saying that I said Jack Ma is in a jail in Mongolia. Okay, but I'm not a fan of China as an investing environment because the emperor has too much rule. If you can basically shut down a company whenever you want to, why would you put your hard-earned money there? Now, when I talk about things not being investable from my standpoint, people always misconstrue this with me saying that you can't make money. Just like when I said I don't believe in the metaverse. Guys, you can make a ton of money trading. You can make a ton of money trading Meta. You can make a ton of money trading Alibaba. You can make a ton of money trading Neo. It does not mean they are investable. These are very two different sports, in my opinion, right? Investing and trading. I still trade Meta to this day, but do I believe in the metaverse 10 years, 20 years down the line? I personally don't. Do I believe in China as an investable environment? I personally don't. Doesn't mean I won't trade them? No, but you're asking me a specific investing question. So there you go. That's my take. Where in the world is Jack Ma? Z with the classified news. Yeah. Eric, bro, you're wrong for that. Eric said, I ain't seen anyone who looks like Jack Ma. Dude looks like Ken Jeong crossed with E.T. What the fuck? Bro. Oh my God. Joseph DeGarmo and Jack Ma chill. Can China economy survive without the USA? I think they can survive, but I do think they will be heavily tamped down without the USA for sure. I saw your guitar in an earlier video. What kind of music do you play? I like to play blues, and I like to play 90s alternative. You know, I really like to play Alice in Chains, Nirvana, Metallica, Pearl Jam, Stone Temple Pilots, but I also do really enjoy blues. And then I try to reverse engineer Jimi Hendrix songs, and I still don't know how the fuck he came up with some of these riffs. He's an enigma for sure. Do you think Intel would be a good investment? Not for me. But if you do have to put your money in semiconductors, there's an ETF for that. Where do you board? Do you like Breckenridge or anywhere in the Vail network? I really love boarding in Lake Tahoe. Not that far from me, but I really like Lake Tahoe. I'm spoiled, man. Like I'm a California snowboarder, so I don't really like anywhere that's too cold, and I actually wait for the sun to come out before snowboarding. I don't like snowboarding when it's actively snowing. I wait for the day after the snow when it's sunny, and that's the day that I like snowboarding. Did you watch The Last of Us? Yes, I thought it was brilliant. The Last of Us was honestly one of the best shows that I've seen in a very long time. And Pedro Pascal is a fucking A actor. And Bella Ramsey too. Oh my God. It took me a while to realize that she was in Game of Thrones. I was like, where do I know this actress from? Amazing. Amazing. I mean, yeah. Are you going to play the game now? Yeah, I didn't play the game before, but now I want to play it. Are you Pedro Pascal's son? What? I mean, dude, I'm 42. I hope I'm not his son. It means he had me when he was like fucking 10. Have you ever been to Michigan, Northern Michigan? Yes, but I've never been snowboarding in Michigan. I've been to Detroit. I will reserve my opinions on what I think. Are you going to short now? No, look at this. I have the S&P right here. I'm waiting to see how the market reacts to this. We have a lot of levels up here, so no. Go blue. Oh, yeah. Tom went to, he said last time that he went to Michigan. But isn't University of Michigan, is it in Ann Arbor, right? It's not in Detroit. In your opinion, did NASDAQ bottom? You mean forever, ever? No, I don't think, unfortunately, I don't think this is, I don't think that this is potentially the bottom. Now, it doesn't mean we can't see melt-ups, but this right here has not played out yet. We haven't seen the effects of the rate hikes yet. You know, I think we're a very long ways away. And when I say, okay, let me reframe this. Not very long ways away, but I'm talking about months before seeing the total effects on how the rate hikes are going to affect the economy. We already saw 2 banks go insolvent, right? Is the banking contagion contained? Is it something that's going to continue? For now, it looks like it's contained, but it doesn't mean other things in the system won't break, right? And until we get this flattening, until the Fed pauses, we won't really see what else is uncovered in our financial system that could be disrupted by aggressive rate hikes. So, you know, I'm very reluctant to call this the bottom, but I do think I still stand on my ground saying that October was a great time to invest. Now, again, it's not because I'm Nostradamus. All I was looking at was a 50% retracement of the last bull market, right? If you look at a 50% retracement of the last bull market, it lands exactly in October. And when I did that video and I said, I'm comfortable investing here, it is strictly because of that. It wasn't because I thought it was the bottom or anything. It was because if you get a 50% retracement of a bull market, historically, that is one of the best times to invest. You cannot pass that up. That's it. Ann Arbor and Detroit are very different. Yeah, I've never been to Ann Arbor, only been to Detroit. Do you eat pork? I don't know. Do you eat fucking sloppy joes? Yes, I enjoy all kinds of foods. Hey, 2 of the guys I watch here, Hi Z and Hi Tom. What's going on, Alex? Love your insights. Appreciate you, Shamar. Thank you. What do you think of Detroit? No, you're not going. You're not going to get me. You're not going to get me clipped on that. Okay. I love sloppy joes. Okay, this stream is turning degenerate once again. Thank you guys. Thank you guys for contributing to this. I got people asking me to flash them. Some dude was pissed because I wouldn't look at Walmart right away. And he left the stream because of that. We're talking about Jack Ma. Someone's asking me if I eat pork. Alia, what's going on? Alia, the pork question. Judging from your name, I think you would know why someone would care. These judgy mother effers who are probably basing their question on religion. And I'm just assuming that you know exactly why I'm saying that. I assume you have the patience for all these silly comments. Well, I mean, it keeps the stream entertaining. Come on, Z, show more skin. Richard, pipe down, bro. You haven't flashed to me, and I'm still here. Guys, stop it. Alia says, I do, but still an idiotic question. Yeah, I agree with you. What's the next big play? I'm honestly, 2 big plays I'm looking at, okay? I'm looking to take a long on 2-year note futures once again. Again, I was long, hit my stop limit, and now we are finally, thank God, seeing a retracement. Going to be looking to take 2-year note futures long once again because of this, right? As soon as the Fed pauses, we're going to get a complete tanking of the 2-year yield. The 2-year yield, if you guys look at it historically, the 2-year yield is hilarious. It is paltry. Right now, the 2-year yield is paying a gift. It is giving you 4.3%. It actually went above 5% last week, okay? This never pays 5%. So this is why I was saying in one of my videos, I'm a lot more comfortable buying bonds at the moment than I am in the stock market because bonds are offering risk-free high yields that only your parents have seen, right? Yields that we haven't seen. But historically, like if you look at, all of the 2000s, the 2-year yield wasn't even paying. How do I isolate this? Hold on. The 2-year yield wasn't even paying 1% for, almost 7 years. And then it finally went above 1% in 2017. And then started rising, right before the pandemic, and it got to a high of like 2.8. So the fact that the 2 years paying 5% is crazy. Someone had asked me about something. Ali says Z is Spanish. Like from Spain? No, I'm not from Spain. Do you have any pets? No. Honest question about Michael Burry tweet. Which one? Tell me what he tweeted. Next time CPI live streams at OnlyFans. Yeah, I wonder, would I be the first finance YouTuber on OnlyFans? I don't know. Invest in Adderall. Stuff is becoming worth more than God. I don't know, bro. Is Tom from Australia? I believe Tom, I don't know. Tom, where are you from? Speak for yourself. I don't know. I'm going to guess that Tom is somewhere from Eastern Europe. Maybe Russian. Z is from Culver City. I used to live close to Culver City. Do you drink regular milk? Jesus Christ. Not regularly, but I have no problem with milk. Do you have any opinions on Toyota stock? No. Do you use TradingView for regular charting? Yes, TradingView is much more robust than Thinkorswim. For sure. What time is it? 7. Wow, we're not even an hour into market open, and these questions are already giving me an aneurysm. But yeah, 2-year note futures, that's what I'm looking at. Someone had asked me about TLT. The thing is, here's the thing with TLT that people don't get. TLT is based on long-term treasuries, okay? 20-year plus. Really just these two here, the 20-year and the 30-year, okay? It is not based on short-term treasuries. And TLT, while it can move in conjunction with what the Fed is doing, what the Fed does affects short-term notes more than long-term notes. It doesn't affect long-term notes as directly as it does short-term notes because the Fed funds rate is an overnight rate, right? It's an overnight rate. So naturally, it affects shorter-term treasuries because it is competing with shorter-term treasuries. That's why we tend to look at divergences such as the 2-year note versus the Fed funds rate because of that, okay? So TLT is not a way to play Fed policy. If you want to play Fed policy, you got to play 2-year Treasury note futures or ETFs that deal with short-term Treasuries, okay? TLT is based on long-term Treasuries. While, again, it does move in accordance with Fed policy, it doesn't move as directly with Fed policy as short-term Treasuries do, okay? And you want a long TLT when you think long-term Treasuries are going to drop in yields, and you short TLT when you think long-term yields are going to go up, because there's an inverse relationship between yields and prices. So, yeah. And if we take a look at the 10-year yield, you could see that we are jumping right now. So a rare event in which the 10-year yield is up 4% and the S&P 500 is up 1.6% at the moment. That is rare occurrence. Usually these move inversely. And I'm assuming that the 10-year yield is up for 2 reasons. One, it's a technical bounce. And 2, core CPI actually came in slightly higher than expected, even though CPI came in line. So hopefully that answers your question. All right. Let's see. Good to go long on TLT. Doesn't look like it. If you're talking about long-term investment, sure. If you're talking about just right now, as in this how it looks technically short term, not. There isn't a signal here in the short term, in my opinion. But as a long-term investment, sure. I'm starting to like bonds here as a long-term investment. Do you use Bookmap? No. I actually can't stand looking at Bookmap. I think it's the ugliest chart I've ever seen in my life. All right. What's the best country you've ever visited? I get this question a lot. That's very hard. That's a very hard question. I like so many things about so many places. But Mexico is one of my favorite countries for sure. I think it's so diverse, and people only visit a very, 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 very small portion of Mexico. But it is so diverse in terms of landscape, culture, and food. Mexico is so vibrant, and depending on where you go, it's the landscape could be totally different. Even the languages could be totally different, right? I was recently in Huatulco last month. And there's a very large indigenous population there, and they even teach the indigenous language in the schools there. And people still speak the indigenous languages there, right? And the food is quite different to, say, if you went to Jalisco, right? Or if you went to Chihuahua, it's very different. Is Mexico dangerous? Is the U.S. dangerous? Yes. The U.S. is very dangerous. So is Mexico. Mexico can be dangerous. So can other parts of the world, for sure. There are safer places than Mexico. Yeah, I will not contest that. But there are also safer places than the U.S. If you look at big cities right now, the crime rate in big cities is actually going up. Big cities like L.A., New York. I mean, people are getting robbed in broad daylight, which is crazy. But yeah, I mean, as long as you're not an idiot, and you're not walking around with your Rolex and your expensive camera, and you're not trying to buy drugs off the street, and you're just there to respect the local culture, have a good time, it would help if you knew a little bit of the language, just like anywhere else. I mean, just move. Don't move like an idiot, and you'll be fine. All right. Favorite football club? Unfortunately, but at the moment, Barcelona. Sardinia was also amazing, by the way. I spent a month in Sardinia last year. I loved Sardinia. It was such a surprise and crazy to me that more people don't visit it, for sure. Is Brandon Moreno the biggest babyface in the UFC? Yeah, I mean, dude looks like he can't hurt a fly, but he's a fucking savage. Lewandowski's out of shape these days. He looks very different than he did during the World Cup. I'll give you that. All right. Do you carry protection? Oscar, first of all, thank you for your donation. $5 to St. Jude's. Appreciate you. Is that why you paid $5 to ask me that question? Well, I guess you'll never know unless you try to run up on me. If you see me in the streets, try to run up on me and then you'll find out. Ever snowboard the Canadian Rockies? No, I have snowboarded in Whistler before, and Whistler is fucking awesome. Your Spanish accent's on point. Thank you, Anwar. Thank you. Tesla up 4% right now. But again, every stock is up. So to me, you know, this day is an anomaly. I will want to see how this reaction plays out in the days to follow leading up to FOMC. I do think we can get a melt up leading into FOMC. Because think about it. If we don't get any more bank runs, right? The bank situation seems contained, at least for now. CPI came in line. It's going to likely be choppy or somewhat of a melt up until FOMC. I don't think, unless we survive another bank run, I don't think there's an impetus for a major decline. And if you guys watch my videos, what did I say was my target rate in the short term until CPI? I said 3,800, right? Yesterday we hit 3839 on the S&P 500. And again, this isn't some sort of sorcery. I was targeting that because of this here. And that's why I said I think 3,800 is in the cards. Until CPI, and if CPI comes in line, then we will likely see a bounce from there. And we hit 3,800 yesterday. So did you drink tequila in Mexico? Yes, of course. Actually, in Huatulco, I drank mezcal because it is mezcal is much bigger in Huatulco than tequila is. And it was, someone gave me some mezcal that was so strong. I literally got drunk just smelling it. I swear to God. I prefer mezcal. I like tequila more than mezcal in general. But yeah, if you're looking for a hard drink to sip on, mezcal to me has more variety. There's a lot more flavors. There's a lot more of a flavor spectrum. And it is a lot stronger than tequila. What would be a good bond trade for upcoming for 6 months to park cash? I mean, just go to treasurydirect.gov 6 months, and there you go. 6 months, coincidentally, is the highest paying yield out of any treasury right now. So this is risk-free. If you're looking to park cash and you're not looking to invest in a risk-on asset, 6-month treasury is perfect for you. Go to treasurydirect.gov, and there you go. Mezcal is a bit more smoky. Yes, it could be for sure. Your gym in the garage is impressive. Appreciate you, Tommy Luck. That is courtesy of Rep Fitness. Rep Fitness. I was blown away by the quality, especially compared to a much higher priced brand like Rogue. It definitely comes in line in terms of craftsmanship and quality. It's very much like the Rogue equipment. It's super high grade, and it's impressive. I really like it. So Rep Fitness, and it's a lot cheaper than I thought it would be. Roman donated $53 to St. Jude's. Appreciate you, Roman. If you have a question, let me know, man. I like the unorthodox amount, $53. Must be a lucky number of yours, but appreciate you. Thank you so much for always donating and always watching. Appreciate you, man. You think POTUS came out with comments yesterday so the Fed can still do a 50 basis? Nah, I don't think so. I think the Fed is going to do 25, honestly. 25 and then pause. You see Henry Cejudo fighting again in May. He's got the title fight against Aljamain. Yeah, I mean, I think that's going to be a good fight. Aljamain, not really my favorite fighter, honestly. I think it was impressive what he did to Petr Yan. I didn't think he would beat Piotr Jan like that, and he made him look very pedestrian. And I think Piotr's actually hasn't won 4 out of his last 5 fights. I never thought a fighter like Piotr Jan would actually be, would actually be in trouble like that. I mean, the guy just looked unbeatable. Unbeatable. Piotr Jan for a while looked unbeatable, and somehow he's managed to drop 4 out of his last 5. Are you married? No. Where do you think the Nasdaq is going overall? I think the Nasdaq and the S&P 500 are gonna melt up from now until FOMC. I really think so. I think the Nasdaq does have a date with around 13,000 until FOMC for sure. Piotr Jan lost this last weekend. Yeah, I was saying, bro. I was saying that he's looking very pedestrian. I never thought a fighter of his caliber, I never thought he would look pedestrian. Piotr Jan looked like he killed at least 2 people before, right? That's how Piotr Jan looked. And as we are approaching this imbalance that I marked here on the S&P 500, now I'm interested in potentially looking for a short, by the way. You just got to hold the bill for 45 days. You're talking about the treasury? Yeah, you can always sell the treasury back on the market. Oh, the 6 month just crossed 5%. Wow, just as we were talking about this. So whoever was asking about a 6 month treasury, there you go, just crossed 5%. Next time you're in Okinawa, try the Habusaki. For sure, dude. Never been to Okinawa, definitely on my list. We're trying to go to Japan this year. Hopefully that's in the cards, and Okinawa will be there. Can you guys get the stream to 500 likes? 8 more likes. I know there's at least 8 people watching that haven't hit the like button. Takes 2 seconds. Get it to 500 likes, or I will not give you my trade. This is where I'm interested in potentially shorting here. Potentially. You could front run this with a tight stop above this, but we do have this liquidity area to contest with at 39.71. But I'm finally starting to look at shorts here now that we've hit this level. Which M car do you drive? I used to drive the M3. I sold that last year, and currently I drive the X4M competition, and I love that car because I could take that up to the mountain. Whereas the M3 was rear-wheel drive, and in the mountain, if it was snowing, it just performed horribly. But the X4M is all-wheel drive, so it's a beast in the snow. You going to Japan in April? Yeah, we were thinking about going around April, May, around that time. It's cold as shit right now, but yeah, we were thinking about going April, May for sure. Alfredo Garcia, thank you so much for your $20 donation, bro. Appreciate you. Thank you. How do we trade the 2-year on Webull? I don't know. Ask Webull. I don't use Webull. All right. The SCO BMW. If you're going to JP, maybe is better. Golden Week. When is that, Martin? Let me know. Low volume zone on volume profile. Yeah, I don't really trade with volume, honestly. I personally don't think you need it. Would you own a Tesla? No. If I'm looking at an EV right now, I'm looking at the Kia EV6 GT. My problem with Tesla, and I still think Tesla, like the Model 3 is probably the best bang for your buck. If you're going by price and range. But I know that it does have my problem with Tesla is if your car does have issues. I've heard of nightmare scenarios in some locales where it's taking so long to get your Tesla looked at. But the EV6 GT, the Kia EV6 GT, I think got a 10 out of 10 on Car and Driver, and it's just a beast of a car. It's this car right here, and it's the only car that I've seen, and I've done research on EVs, that can match Tesla in terms of range and price, right? So if you're going for a Tesla performance model, even the basic models, the range on the Kia EV6 and the price range of the Kia EV6 matches, is in line with Teslas, right? But even like the Ford, the Mach-E, it's a nice car, but it's too expensive for the range that you get. You're much better off getting a Tesla for the price, right? The Ford Mach-E, the range is terrible compared to the Tesla. But I do really like the Kia EV6 GT. Yeah, if I do go electric, probably looking at that. Josh, what's going on, bro? Josh is a baller member of the Academy and a baller trader. Thank you so much for $20, bro. Appreciate you. Still waiting on that nephew application. Always wanted to go to Japan. Sharing some of the profits from all of the crazy scalps yesterday. Yes, especially the scalps that MDM, another member, shout out to MDM, has really been blasting the Discord with SPX scalps and killed it yesterday. Absolutely killed it yesterday. Regional banks, more to come. I can't tell the future. For now, it looks like the contagion is contained, but I don't know. You're mad. The Model S is a beast. I didn't say Teslas weren't beasts. I said that if there are issues with Tesla, with my Tesla in some areas, especially if you live in a big city like I do, there have been issues with how long it takes to get your car fixed. So yeah, that's all I'm saying. Hell yeah, Academy's fire, completely worth every penny. Appreciate you, Alfredo Garcia. And yes, if you guys are interested in joining the Academy, if you're interested in my live trades, if you're interested in knowing when I'm going to take the 2-year note futures trade, as well as some of the other trades, including a trade that I'm eyeing right now, and you want real-time alerts, apply to the Academy. Link is in the description below. You will know very soon if you are accepted or not. But appreciate you, Alfredo, and Josh as well. And thank you again, Josh, for the donation, man. Appreciate you. I thought First Republic was a good bank. I don't know what you mean by good bank, but sure, there were fears of a contagion on regional banks. And after Kramer had tweeted that First Republic was a good bank, they dropped 70%. SPX gap close is going to be nice. Yeah, let's look. I'm looking at the S&P futures. Let's look at SPX. I don't know if we get a gap close today, honestly. This looks like a very squeezy day. Again, not looking for a short here. You guys have asked me since I've opened the stream if I'm going to short. I'm looking for a short only after liquidity is taken, and I really want to see a market structure break. But right now is looking like a time that I would start to think about how I'm going to position a short if I'm going to take one. But I still would not take a short here. Market structure looks just too bullish here, right? And again, more is lost trying to trade against the trend than with the trend. Is there a symbol for the 2-year? Yes, ZT. It's a 2-year note futures right here. Yeah. And I'm looking to jump back into this long. I hope we can get down here. Because I would look to jump back into this long. Because again, I was long, got stopped out, and then it had the best 3-day performance of all time without me. And by the way, the 2-year note futures, or the 2-year note itself, has really been the canary in the coal mine for previous recessions, right? Let me show you what I'm talking about. There is this account that I follow. Where is this guy? Right here. Jim Bianco on Twitter has really good macro research. But He says, today the 2-year note declined 61 basis points. This was the biggest one-day decline since October 1st, 1982, the first discount rate cut following 1981 all-time peak in yields. To emphasize, today's decline in the 2-year was larger than any one day seen during the 2007 to 2009 GFC, 9/11, and the 1987 stock market crash. If markets signal, what is the 2-year telling us? Yes, historically, this has not been good. You know, this type of movement in the 2-year has not been good. And if you go back a little bit more, it says the 2-year yield is down 85 basis points in the last trading days. In the last 40 years, only one time has the 2-year yield declined this much over the last 3 trading days. The 1987 stock market crash. This was known as Black Monday. I think it was October 19th of 1987. Also, last Wednesday, the market was pricing an 80% probability of a 50 basis point hike, now a 44% probability. Actually, we should take a look at what the new probabilities are for the Fed rate hikes. Let me see. Here is the FOMC watch tool. We are now pricing in an 86% probability of 25 basis points, 13% of no basis point rate hike, meaning meaning a pause, right? Just a week ago, before the bank contagion or the bank runs, we had a 70% chance that the Fed was going to do 50, right? And that's because the CPIs came in revised higher, and we had a strong employment market, et cetera, et cetera. And the last CPI came in higher than expected before today's. So now we have a 0% chance we'll do 50, 86% chance we're going to do 25. So 25 is the priced in. If the Fed does 50, I do think we will see a market crash, or at least a market downturn, revisiting that 3,800 on the S&P 500. But I don't see the impetus. Okay, here's the thing. Can Jerome Powell do 50? Yes, there's one scenario in which he could do 50, okay? He could do 50 if he thinks that the bank runs are contained and there's no more risk in banks. If there's no more risk in banks, he could still do 50, in my view, and keep his foot on the pedal. It really depends on between now and March 22nd, what does the banking situation look like? Because if we take a look at bank stocks, they've rallied really. And as I said at the beginning of the stream, you know, this is a really, I don't want to say this is a good time, but this is this is a potentially good point to start dollar cost averaging in banks. The regional banks up 7% today. This is after dropping, 8% and another 12% and another 4%. So what, 24, 25% in the last 3 days? It is now up 7%. Okay. I still think that there is a good opportunity in regional banks soon, unless you think that the banking sector is going to go bust. And then in XLF, which has been a stalwart, really just a behemoth in terms of sectors of the S&P 500 that have pretty much held up, since we've had that bull run after the pandemic. That one has been unorthodoxly down 8.5% in the last week. And we are seeing now it is up, 2.66% today. So I do think that there is upcoming opportunity in financial stocks, right? But if between now and March 22nd, we don't see really any more risk to banks, I do think that the Fed can potentially still raise by 50 and shock everyone. Does this week have quadruple witching? I believe that's next week. Let me see. Quadruple witching in March. You're right. This week. Yeah, March 17th. No, not March 15th. That's tomorrow. It's always on a Friday. It's March 17th. Hey, all right. What is your next 5 to 10 years profit target for Tesla? I mean, God, these things are so hard to predict. But yeah, I mean, I think Tesla will probably be, you know, a $400 or $500 stock in the next 5 to 10 years for sure. All right. We are about to embark on a monster trade potentially on the S&P 500 because it is hitting an area of liquidity that I've been eyeing since before market open. And I definitely want to take advantage of that. Where is the chat? So I'm going to hop off and trade. Oh, wait. Before, I'm not going to hop off. I'm not going to hop off, guys. Let's read this. First Republic Bank up 57%. All right, good on Jim Cramer. He's not completely embarrassed here after it tanked 70% after he announced that it was a good bank. Actually, let's see how far down it is still. Okay, it's I should have bought calls on it, honestly. I was thinking about this yesterday, but right here he tweeted that it's a behemoth of a stock. I can't remember the words that he used. He didn't say fortress. That was JP Morgan, but it was right here. So it's still down since Jim Cramer tweeted that all eyes on FRC. It's down almost 50% still. So even though it's up 50, almost 60% today, it's still down 50%. This is how much it needed to increase in order to get back to, to before Jim Cramer tweeted about it. Okay, let's take a read on this. Moody's cuts outlook on U.S. banking system to negative, citing rapidly deteriorating operating environment. Holy shit. And Moody's is the leading credit rating agency. And by the way, not a lot of credibility in my book because they were one of the parties responsible for the 2008 financial crisis because they were the ones that were rating the mortgage-backed securities. Moody's has no fucking leg to stand on. They were rating the mortgage-backed securities as, A plus or, A-rated credit. And these were the mortgage-backed securities that they were giving mortgages to anybody. They were giving mortgages to, any creature with a heartbeat that can sign their name on the fucking dotted line. They were giving mortgages to fucking squirrels and dogs and shit, let alone people who weren't qualified to take on, $500,000 mortgages. Really, there isn't more on this. I'll see if CNBC has something on it, but there isn't more in this story yet. Moody's cuts outlook on U.S. banking system to negative. In a harsh blow to an already reeling sector, Moody's Investors Service on Monday cut its view on the entire banking system to negative from stable. So what I think really needs to happen here is there needs to be an emergency stress test of our financial institutions, right? I think that's something that's free, and it will reinstitute depositor confidence on banks. So especially banks like JP Morgan, Bank of America, Wells Fargo, they need to, even though they've passed stress tests with flying colors, the last stress test that the banks did, they need to institute an impromptu or spontaneous stress test right now. They should do that. And reinsure depositors that, hey, we're solid. SVB was exempted from emergency stress tests. Yes, they were. There were a lot of regulations that banks like SVB sought to ease, and that was one of the reasons why they were allowed to operate in such a shitty risky manner. And you know what I heard yesterday? I heard that they actually didn't. Actually, I'm going to pull this up. We'll watch it together. But I heard that SVB actually did not have a compliance officer for, I don't know, for like a year or something. It was insane. Let me find it. I think it was on Valuetainment. SVB. Let's see. Good luck. Fed will probably raise rates by 25 basis points. Yes, that's an 86% chance now. But before that, I want to watch this here.
Disclosure that you have to disclose and let them know, do they have that kind of a responsibility, or you don't know the answer to that?
Regulations would be, and if
other than the payouts that executives got, by the way,
accused of is insider trading. What a lot of 97% of the money at Silicon Valley Bank is not protected by FDIC. I've seen 93%. I've seen 97%. Just so you know, that's the one I posted, but they took it down. It just go to the picture I sent you. It's another one of those pictures I sent you, Rob. That should be on your phone. Go one more. Right there. Look at this. This is their tweet. This is 6 days ago. Proud to be on Forbes' annual ranking of America's best banks for the 5th straight year, and to also have been named the publication inaugural Financial All-Stars list. They tweeted this. I retweeted this. They took it down because they obviously, I'm sure a lot of people were retweeting this. This was all over the place. They don't want people to see. Just 5 days ago, you're bragging about this. So this becomes the question. There's a terminology called front running, right? You know what front running is. If you can pull up the definition of front running, let's just read the exact definition. When you're in it, you're the guy that knows what's about to happen, and you do it.
You're to position.
I'm trying to find
that's crazy.
And as people dig in, what did they see? They see this $15 billion in unrealized losses that they didn't have to report. But now that you dig in, and what do they start telling their clients? They start telling your clients, hey, you know what? This bank is vulnerable. I'd probably take my money out of there. And as deposits start now cascading out of there, this is where they have to raise money. They go to raise $21 billion, and they do because they have to. But how do they do it? They sell some of their assets. Now, when you sell those $21 billion, they cherry picked them. Only $2 billion in losses, but now you have to realize those losses, right? So when people look under the hood, they say there's another $13 billion in unrealized losses. People start pulling out money in droves. They can't borrow money. The shorts are attacking the stock. They can't issue stock, and this is how it happens so quickly.
So let me just give some of the stats. If you can show have this here, 16th largest bank. 97% of the money at Silicon Valley Bank is not protected by FDIC. I've seen 93%. I've seen 97%. Whoever's right, one of the two. Either way, it's a lot of money. 12 days ago, like 13 days ago, the CEO, Gregory Becker, sold 11% of his shares. Daniel Beck, the CFO, sold 32% of his holdings. CMO Michelle Draper sold 28% of her holdings, around $5.1 million. If you post a picture of Forbes just 7 days ago.
This one right here.
By the way, they took the tweet down, just so you know. That's the one I posted, but they took it down. It just go to the picture I sent you. It's another one of those pictures I sent you, Rob. That should be on your phone. Go one more. Right there. Look at this. This is their tweet. This is 6 days ago. Proud to be on Forbes' annual ranking of America's best banks.
So in my view, there should be insider trading investigations to the executives that sold the stock before all of this happened, okay? Because they were basically touting that they were one of America's best banks. They went to accept the awards. Meanwhile, in the background, they knew that they were about to get downgraded because Moody's gave them a heads up. Moody's said, hey, we're about to downgrade you. You guys don't even have, and I want to get to that point here where they didn't have a compliance officer, I think for a period of like 6 months, which I don't even know is legal. So they didn't have a risk compliance officer, and they sold their shares before any of this unfolded, right? So while I'm glad that depositors got their money, and I'm glad that seemingly up until now, it doesn't look like taxpayers are going to bear the brunt of it, these insiders sold their stock before the company collapsed. So, I hope that you guys didn't take my video yesterday when I was explaining that I didn't think this was a bailout based on my definition of a bailout from what I saw in 2008. That does not mean that there aren't people that actually should be investigated and prosecuted. Absolutely, there should be investigation and prosecution into the insiders that sold before all of this unfolded, right? Because yes, the bailouts aren't going to bail out shareholders and they're not going to bail out executives. But if executives already sold hundreds of millions of dollars of their shares before all of this collapse happened, knowing that they were about to get called out in the public for having mismanaged the risk, that to me is insider trading. And they should definitely open an investigation, not only to the potential criminality of selling your shares early, but to obviously the mismanagement of risk, and the fact that you did not have a risk compliance officer or a chief risk officer or chief compliance officer on your payroll for 6 months. Let's see. Apparently there's a story here. Justice Department. Nice. So it says Justice Department. This just came out. Justice Department SEC investigating Silicon Valley Bank collapse. The U.S. Department of Justice and the Securities and Exchange Commission are investigating the collapse of Silicon Valley Bank. The Wall Street Journal reported on Tuesday, citing people familiar with the matter. The SEC and spokesperson for the Justice Department of Washington declined to comment. SVB did not immediately respond. The Journal report comes a day after SVB and 2 top executives were sued by shareholders who accused them of concealing how rising interest rates would leave its Silicon Valley Bank unit susceptible to a bank run. The proposed class action lawsuit against SVB. See, this is cool. So shareholders, regular shareholders like you and I who might have held SVB stock, are now going after the executives. And I definitely think that they not only should be looked into, potentially sued and some of that money recouped, but they should be looked into criminality for sure. All right, let's see. Are you looking at any trades today? Yes. Okay, the S&P 500 is approaching my area of liquidity. If you guys have been with me since 8:30 a.m. Eastern, I was saying that I'm not going to be shorting until we reach this area of liquidity. Then I will be looking at shorts. I'm actually going to sign out and start trading with the Academy because I need to concentrate and I need to take a look at this short. I will also be looking at 2-year Treasury note futures. I'll be looking at longing that. So if you guys are interested in the real-time trades, hit up the Academy, and I will see you guys there. For those of you that are in the Academy, thank you for joining me for 2.5 hours on this stream. Hopefully you got something valuable. Leave a thumbs up on your way out, please, so that other people can find this stream even after it's recorded. And if you guys want me to open up monthly subscriptions to just the Discord, let me know. And hit that thumbs up, and I will consider doing so for sure. I stayed here waiting for you to trade. Well, hit up the Academy, and we will trade together. But I appreciate you guys. I will see you guys. I'm losing my voice. I need to get some water. I will see you guys on the next one for sure. But yeah, thank you guys so much. Thank you, Trouble Man, for always joining and commenting as well. Ali, thank you as well. Brandy, thank you as well. If you open up monthly, I would be able to. Appreciate you. Soner, thank you as well, always for joining. Leave a thumbs up on your way out if you guys want me to open up a monthly, and I will definitely consider it. So yeah, thank you guys for joining. 2.5 hours on the stream. Thank you guys for your donations as well.